So how much do you really need to save for your first property? Do I need 20,000, 80,000? Is it 3% down, 25% down? What's the right answer for you? I'm going to share with you the biggest misconception people have about it and give you the facts and the truth of the matter. The answer to how much money you need for your first house is a very difficult one to answer because it's different for everybody. And someone that you speak to tells you one thing and another person tells you another thing. And one lender is going to steer you in another direction while another one wants you here. So what is the right answer and what are my options? I want to share with you guys that today. And I'm going to share with you some quick facts that I found very surprising, and I'm sure you will too. Do you know what the average down payment is in America for those under age 30? It's actually only 8% of the purchase price. A lot of people, and this is the biggest misconception that people have, a lot of people think that you need 20% down to get into your first house. Actually, 41% of Americans today that haven't bought a home yet believe that to be true. They believe that the only way that they can get into home ownership is with a 20% down payment. And that is so false. There are so many more options and availability for you to get into a home. Additionally, 50% of Americans don't want to put less than 20% down on their home because they're afraid of paying what's called PMI, private mortgage insurance. And that is an extra monthly cost that you have to incur if you put something less than 20% down, because to the lender, you're more risky. So in order to insure that risk, they have you pay a premium. Now this premium is usually only $50 to $100 a month more. It could be less and slightly more depending on your credit score and how much of a risk you are. But the fact of the matter is that you can refinance out of this PMI in a couple of years when the value goes up and your debt goes down. It doesn't have to be with you for the whole 30-year period you have that mortgage. And that's a huge misconception people have as well. So don't be afraid to put less than 20% down because you have to pay an extra $50 a month, because that does not make financial sense when you weigh all the other benefits of home ownership. Here's the truth. You can put 20% down on a house if you'd like, but you don't need to. You can only put 3 to 5% down, and you would be able to then have the ability to get into home ownership a lot quicker. Because the difference between a 3 to 20% down payment is tens of thousands of dollars and many, many years of saving for a lot of people. Back in the day, 30, 40 years ago, 20% down was very feasible for a lot of people because the purchase price of the homes were a lot less and wages were more equal to what the median price of a home was. But today, that's not so much the case. So we're seeing more and more people purchase a home with less than 20% down. And this is a great avenue for you to get into home ownership without having to wait years and years to get to that 20% down. You can also, if you're a veteran, and in certain situations, you can get 0% down loans. That's not always the smartest thing, but it could be a great option for you that you should consider. You can put down more than 3 to 5%, but conventionally, that's really the sweet spot and the minimum for a lot of people to be able to get into it. So here's an example. Let's say you go shopping for a home and you're able to buy one for $350,000. And you want to do a minimum down payment of 3%. So what's that going to look like? We're going to have a down payment of $10,500. That's 3% of $350K. And then we're going to have closing costs. Now the closing costs vary state to state, but they're going to be anywhere between 2 to 5% of your loan amount. In the Northeast, New York, Connecticut area, it's going to be on the higher end. So 3, 4, 5% is where you're going to be. Let's say somewhere in the middle. 3% of the loan amount, $350,000, is going to be about $10,000 in closing costs. Okay, so roughly with a 3% down payment and the closing cost, you're going to need $20,000 or $20,500 in your savings to be able to buy that. Now, additionally, you will need an emergency fund, right? So if you have this number in your savings account, you can't deplete it to zero because number one, the bank won't give you a loan, but number two, it's just not smart. We need to know that we have at least 3 to 6 months of expenses in our savings after we dish out the $20,000. Now look at this difference. If we did 20% down here, it would be $70,000 instead of paying $20,000. That's more than 3 times the amount, and that's many, many more years of saving to get to that number, to be able to buy the same house, right? So there's a huge difference, and keep in mind that, yeah, your monthly payment's gonna be higher here, right? Because you're putting less down. But if you can still afford that monthly payment and it's within your budget, this is a lot smarter, I think, nowadays than saving up for the 20%. So there you go. That is a great example of what you can do nowadays. You go out into the market, look for a house, ask the lender, hey, can I get pre-approved for this purchase price? I want to put the smallest amount of down payment, and then see what that monthly payment looks like. Can you get approved for it, and is it within your budget? If so, then go out and do that. It's gonna make a lot of sense for you, and you can build your net worth and equity quicker than you would if you were renting. You know, if you're gonna rent a 1-bedroom apartment nowadays here in the Northeast, you're gonna spend $10,000 to $15,000 to get into it, to furnish it, first month's rent, security deposit, and then all those years of paying rent, that's all consumed, that's all spent. You don't get to see that again. When you have a mortgage payment, a portion of that is gonna go towards paying down your loan, and you're building your net worth. That's why homeowners have significantly more wealth than renters. Go out there and see what you can do with what you have now. You can probably get pre-approved, even though you may think you can't. There's usually a way around it. Personally, I went to several lenders and all of them said, nope, nope, nope. The last lender I went to, he was able to get me approved because he went through the extra work and he had extra knowledge that the other loan officers didn't have. So don't give up, keep going, keep grinding, and I hope to see you on the next video.